Well, let's get the day's top business news for you now. Cole Stangler is here with us in the studio. Good to see Cole. And we're going to start with a very successful IPO in China. This is a video app and a rival to TikTok. Is that right?
Yeah, that's right. It's known as Kuaishou, as you mentioned, rival to TikTok, which is a better known video app in China. But this firm, Kuaishou, had an initial public offering of some $5.3 billion in Hong Kong before shares spiked around 160% on that first day of trading. Kuaishou is one of China's most well-known video apps, counting around 300 million daily users, especially popular in some of the country's smaller cities, but also in more rural parts of China, where it's used for group chats and messaging. The tech sector has faced growing scrutiny from the Chinese government in recent months, but investors here are apparently shaking off those concerns. Let's take a look now at some of the day's trading action. Major European indexes all in positive territory here. FTSE in London just above the flat line, as you can see there. The DAX up around 0.5%. Shares on the CAC 40 seeing gains. Two drug maker Sanofi there reporting an uptick in annual profits. The major Asian indexes in largely positive territory as well to close out the week. The Hang Seng up around 0.5%, led of course by Kuaishou. Shares on the Nikkei up around 1.5% there. Now shares for BNP Paribas also seeing some very strong gains, up around 3% so far. It's after a drop in profits reported by Europe's largest bank, but one that wasn't as bad as analysts expected. Kevin Nedelec takes a closer look at the numbers.
Striking an upbeat note on its 2020 financial report, BNP Paribas' results are nonetheless a sign of the times. Its annual profits for 2020 clocked in at 7 billion euros, a drop of 13.5% from 2019. And in the last quarter, profits dropped almost 16% as compared to the year before. It comes as the French bank, one of the largest in the world, sought to navigate a historic crisis and period of heightened risk. That included an increase in the amount of money the lender sets aside to protect itself from defaults, a sum that skyrocketed to 5.7 billion for the year. The European Central Bank put the brakes on shareholder payouts during the crisis, and BNP Paribas will be issuing dividends in line with ECB limits.
The board of directors will propose to the shareholders' annual general meeting to pay out a dividend of €1.11 per share in May 2021 in cash, equivalent to 21% of 2020 net income, maximum amount based on the European Central Bank recommendation of the 15th of December 2020.
It is also planning to use almost a third of 2020's net income for share buybacks, which is when a company uses its funds to buy its own shares in a bid to drive up prices and reward shareholders. But the bank will wait until the ECB repeals its recommendation not to do so. BNP Paribas says it expects the economy to pick up again, but not until the second half of 2021, with the rollout of the COVID-19 vaccine.
Next to Australia, where authorities have faced off against Google. A proposed law there would force the tech giant to pay news organizations whose content it links to. Google has threatened to leave the country entirely over the proposal, though tensions now seem to be calming. The firm said Friday it's launching a platform that'll pay media outlets for the right to host their work, a move seen as a softening of Google's position. The Australian government applauded the launch of Google Showcase, but says it won't back down from the proposed bill.
They recommitted to Australia, we recommitted to the code. There was a constructive and a productive exchange of views. What they recognise is there is a need to pay for content, and I think they also recognise that maybe some of the threats have been misplaced about their future in the Australian market, because they certainly see a future in the Australian market.
Next up, a major pledge from one of the world's biggest automakers. Ford says it's nearly doubling its investment in electric cars, vowing to spend some $22 billion in the field through 2025. That comes as the Biden administration is expected to encourage electric vehicles through regulations, and as Ford's rivals make similar investments. Just last week, General Motors said it hoped to make most of its fleet emissions-free by 2035. We're going to stay in the United States, where this weekend will host one of the most watched and most lucrative sporting events in the world. That's, of course, the Super Bowl, which is going to look very different this year. For one, there's, fewer fans at the stadium, which means fewer ticket sales. But the pandemic is also shaking up the game's highly sought advertising spots.
The game itself may not have changed, but the Super Bowl, usually the sports highlight of the year, is going to look very different. Gone are the huge crowds, with just 25,000 in-person tickets for a stadium that in pre-pandemic times fit up to 75,000. And the big brands whose adverts had become shows in and of themselves will also be staying away, such as Super Bowl fixture Budweiser, which will be sitting out the game for the first time in 37 years. It says that it will use the money to invest in promoting vaccination against the coronavirus instead.
Advertisers like Budweiser, Pepsi, Coke, Hyundai, Kia, they decided to sit out this year. And it's made room for a whole bunch of newcomers after the year that we've had and so much fear and anxiety and sadness, that it's really the goal during the Super Bowl to entertain, uplift, and to bring in some optimism.
Newcomers include many whose services have been given a boost from the pandemic, such as order-in food delivery service Uber Eats. The firm kicked off its $20 million campaign to support independent restaurants with a throwback to the 1990s cult classic film Wayne's World, featuring the original characters Wayne and Garth and rapper Cardi B.
Yummy time, excellent.
Logitech makes keyboards and webcams, and those have been in high demand as consumers set up home offices. The company's advert features rapper Lil Nas X and highlights how artists use technology in their work. The 30-second Super Bowl spot costs $5.5 million, which is on par with previous years.
And finally, one of the world's largest beer conglomerates is pulling out of Myanmar after the country's coup d'etat. Japanese giant Kirin says it's ending its partnership with a firm linked to the Burmese military. It said it was, quote, deeply concerned by its recent actions. Kirin is one of the world's biggest beer producers. It owns firms like San Miguel and also has a stake in Brooklyn Brewery in the United States. The move has already been applauded by the human rights group Justice for Myanmar. That group, Laura, though, calling for further action. They want targeted sanctions on businesses tied to the military. It'll be interesting to see what happens here in the coming weeks, if not months. We've seen more and more companies investing in Myanmar, especially in the textile sector. European, North American brands, moving to Myanmar. So it could be complicated by developments there right now.
Absolutely. We'll have to keep a close eye on that one. Cole, thank you very much indeed. Cole Stangler there with all the day's top business news. Do stay with us here on France 24. More news and headlines coming right up.